Dr. PhoneFix is one of Canada's fastest growing carrier-neutral device repair chains operating in a multi-billion-dollar sector with 41 locations nationally. The company just closed the acquisition of a six-store chain in Atlantic Canada. CEO Piyush Sawhney will tell us how Dr. PhoneFix is growing its business and, very importantly, the strategic value these locations provide to both Canadian mobile carriers and insurance companies that offer coverage for mobile electronics. I'm Martin Gago with Market Radius Research. Please remember this is neither recommendation nor investment advice. We're here to learn about the company. Piyush, welcome. Thanks for joining us.
Perfect. Thank you, Martin. And I appreciate you giving me the opportunity to present and tell your audience about the company I founded in 2019. And since then, we've been seeing explosive growth in this sector itself. We've seen explosive growth and we are continuing to see explosive growth as well. So let me walk you through the presentation. And if you have any questions, just fire them on my way. So this is a disclaimer page, actually, guys, as you know. So I'm gonna skip through this. Martin, you're gonna be shocked. 600 Canadians break the phone every single hour, and that's from the stats itself done in 2021. The numbers have gone way up, especially with the new price tag on the devices. We have phones ranging anywhere between $2,000 to $3,500 now. But we've seen a 50% increase on the flagship models basically since the last survey done in 2017. So this is a very fast growing industry itself, and it's getting more expensive and expensive. In fact, a survey was done in 2021 where 76% Canadians opted in to get a device repaired rather than buying a new one. The phones these days are expensive. The repairs on them are even more expensive. So, in fact, one of the insurance providers in this space is Allstate. So everybody knows Allstate. So, Allstate did a survey in 2023 and projected that 78 million Americans alone have broken their phones and have contributed to the $149 billion repair industry. Wow. As you can see, there's lots of billions in it. While the repair sector is growing and it's growing across the planet, the next biggest opportunity and the excitement and the next biggest billion-dollar juggernaut is the used phone device sector. So as you can see, the new devices sales are declining year over year by 12%. That's quite evident. Like if you remember 7, 8 years back, we used to have a big lineup across Apple stores for a new device launch. You don't see that anymore. You hardly see 50, 60 people. But I remember my days, we used to have like 700 people waiting in the line from the night prior of the launch. So the new hand sales have declined globally, while the pre-owned or the used phone sectors is actually growing 5% year over year. In fact, in less than 5 years, it's going to be $153 billion, growing at 11.5% CAGR. So in the same survey done, which I was talking about in the previous slide, 41% Canadians opted in to buy a used device. Why would you not? A year-old phone you can get for half the price. So this is quite exciting, and this is the new normal. Actually, people are opting in for used devices, especially when somebody buys a phone from Dr. PhoneFix. We go through all the 58 point of inspections, and we provide 1 year warranty across all locations for Dr. PhoneFix, which is similar to a manufacturer's warranty. So yeah, so this is an exciting category. So when Mr. Steve Jobs introduced the first smartphone and changed the world, actually he gave pathways to two more categories onto the planet, which is repair and resale, both in billions and billions of dollars, and growing globally across the planet. So yeah, so these are exciting times for these categories itself, and we are in the same. We are strategically well located within the Canadian space to lead this category of both repair and resale. So what is Dr. PhoneFix? So Dr. PhoneFix, we found it's the fastest growing carrier neutral repair chains in Canada. Founded in 2019, we've been growing rapidly. Now we have about 41 locations across 5 provinces. So I'm proud to say we are a coast to coast company. So if you bought a phone from Dr. PhoneFix in Victoria, you can go all the way to Halifax to get a warranty done or get a service done from our locations. Why people love us, because we provide same day repair services. Phones are lifeline these days. People don't want to stay away from the phones for a longer period of time. The old days of what shipping out the phones to the manufacturers or the insurance companies was there was a time lag. Now we provide, people can walk into Dr. Phonefish location, get their devices fixed, go grab themselves a coffee. While before the coffee is finished, the device is ready for pickup. So we fix devices in less than 60 minutes, and we're proud of that. And in fact, the Google reviews of 30,000 plus, which we have, is quite evident of our statement. We've also won awards in the same consumer space itself. We've in Italy, Rome, across the planet itself. Plus, we've shared stages in the same category with other bigger telecom names and other Canadian top leading businesses. So proud what we have done so far, and what we are growing. So one of the things I always get asked, what's your repair revenue mix? What's your revenue mix basically? So 66% of the revenue is generated from repairs. The 18% gets generated from our used phone sector. As mentioned in the previous slide, globally that sector is growing. So we are seeing the same growth within our network itself. And this year we are projected to actually exceed our certified pre-owned device sales. And the rest is coming from accessories. Accessories is a higher gross margin category itself, and we are proud to have this into our revenue mixes. So, so I'm a builder. I'm proud to say I'm a builder. I've built businesses in the past and I've exited them. Dr. PhoneFix is one of my fourth ventures. When I say I'm a builder, I build relationships. So I build relationship with the two biggest manufacturers on the planet, Apple and Samsung. And I'm proud to say we're one of the two leading ones in Canada having these relationships. Apart from that, we've got relationships with the two biggest insurance companies on the planet as well, Likewise and Assurant. Without going too much deep in those insurances also, but I'll tell you briefly about what these insurance companies are. Likewise is the is one of the biggest insurance provider. They're across 30 countries, and they are the repair arm, or they are the insurance partner or handler for the biggest telecom in Canada, Rogers. So if you have a Rogers phone and you want to get your device repaired within the Rogers plan itself, that repair is being handled by Likewise, and we are Likewise repair partner in Canada. So we just signed a national repair agreement with them that those devices will be fixed through Dr. Phone Fix locations. So quite proud of that achievement, what we've done. The next biggest expanded strategic partnership which we have done is with Assurant. Um, so who is Assurant? Assurant is again one of the top leading insurance providers onto the planet in the space. They are also across 30 countries. They are listed on NASDAQ. So they are the one behind the MasterCard insurance. They also are the one behind Costco insurances as well. If you buy electronics from Costco. Sorry. So, so this is something we are proud of that. Assurant and these insurance companies have abundance of devices in the network, and with Assurant, our partnership is we are together collectively. We are working to expand the certified pre-owned sales within Canada. So we buy phones from Assurant, we bring them in house, we certify them. We go through those devices go through a 50 point of inspection, and we sell them back into the market. So all those devices which we sell, we offer 1 year warranty across all Dr. PhoneFix locations, which is similar to the manufacturer's one. This is kind of a winning formula on this slide, basically. As you can see, our average revenue per store is 320K, which is quite above the normal standard itself. And all the credibility goes to in all the implementation and procedures which we have implemented in our stores, like the 60-minute repair window. People don't want to stay away with the phones. Like staying away with the phones is, losing your social arms. So people want to scroll through the phones every single minute. So when they come into Dr. Phone Fix, they fix their device in 60 minutes. The winning formula behind this is our proprietary training program. But you're gonna be shocked. There's no schools in Canada providing cell phone repair courses. So we have implemented our own 21 days training program where we bring in individuals, we teach them how to fix phones, we certify them, and and in the same time frame, they also get certified from Samsung and Apple, and all our store have our Apple and Samsung certified technicians within Dr. Phone Fix network. So that's our winning formula, actually, our proprietary training program. The way our proprietary training program has been implemented at every single one in the company, whether it's our area manager, district manager, store manager, they all go through the same training program. So everybody knows how to fix phones. So this reduces our overhead costs. This is kind of our secret sauce of what operations itself. Like you don't need four people to be in the same store to perform the store manager task or to perform sales task or to do technicians. The way our training process is, everybody is trained on the same scale. Everybody is trained on the same operational needs of the store. So in fact, the store is being run by one or two individuals. You don't need four different titles at the store level. So that's our secret sauce. That increases our gross margins, that increases our net profitability and EBITDA as well. So yeah, so we're proud of that training program what we have implemented. During this, one of the another secret sauce is about a supply chain. Because of our relationships with the insurance companies and other people across the planet, so we've got a vast variety of phones coming in, which we bring in, and there's no supply chain issues. Whenever we get those devices in, we sell them, and they're at higher gross margins for us. The second supply chain is with the relationship with the OEM manufacturers. We buy part directly from the manufacturers, so we don't need um, to have wholesalers or middlemen involved. So we buy directly from the manufacturers, eliminating any middlemen into the mixes and increasing our gross margins. And the last biggest thing is which I'm also proud of, is our data security protocols and procedures in places. Phones these days are your lifelines. They are your digital album. They are your digital identity. They are your wallet. So when you drop off your phone or when you lose your phone itself, you lose everything, right? So the protocols and procedures which we have implemented at the store, in our operations itself, those have been actually viewed by the insurance companies. They have been viewed by the manufacturers, and that's how you are able to maintain and build on those relationships. For these bigger folks itself, data security is number one priority, and I'm proud to say that our procedures have been actually passed by them. So this is again something which we have implemented. So like I said in the starting of this presentation, we are a growth company. We've seen explosive growth and we are continuing to see explosive growth. As you can see on this chart, we've been growing rapidly. Um, we are on track to be at 123% CAGR in revenue. During our course of growth itself, we've been named the 10th fastest growing company in Canada, with recently being announced the fastest growing company in North America by Financial Times. So both of these accreditations came from higher financial institutions, and we're proud to say that they've recognized our growth. So this slide tells you how fragmented this market is. In 2020, we had 6 stores. In October 2025, we had 35. Now we have about 41. And we'll end the year in November. We added 6 more, basically, right? So in November and before the year end, we'll be at 45 locations. So we have actually fast tracked our growth by 3 months in advance. And in next 12 to 18 months, we'll be doubling our store count to 70 locations. We are doing this by acquiring and opening organically itself. As you can see, there's lots of opportunity to acquire and consolidate the market. Our primary competition in Canada is a TELUS-owned subsidiary called Mobile Clinic. They are one of the tools with the manufacturers' partnerships. So you can see that they own 6% of the market share, and they're dominating the market with that. We are currently at 2%, but we are growing. The rest of the market is all individual, like individual mom and pop shops, or what, two or three chain guys itself, but none of them are affiliated with any manufacturers or the insurance companies itself. We are one of the twos who have affiliations with everybody. And then now, since as you can see, we are growing, there's lots of room to grow, lots of things to be acquired and consolidate the market. There are over 1,500 repair shops in Canada. We have 41 Our closest competitor has above 125 locations, so we are on track to be that. So we'll be in next 3 to 4 years, we'll be the leader in this space. So as you can see, this is my favorite slide. This tells you who's dancing with whom. So as you can see, we just danced with Gibo Device Repair. We acquired them. So Gibo Device Repair was one of the biggest chain in Atlantic Canada. We just acquired, and it was a strategic acquisition for us to enter into Atlantic Canada itself. That added 6 operating stores into our belt. And now I'll start with the bottom itself, about how this acquisition and how this consolidation is happening in this spaces. So Assurance, one of the insurance providers, they are very big. They acquired a US-based cell phone repair chain called Ubreak iFix, 500 plus locations back in September 2019. Few months after that, Assurant went and acquired the next big chain out there called CPR. Then we were hit with COVID. TELUS went in and acquired the Canadian-based mobile clinic for 80 locations, 465 million. TELUS acquired after that the Canadian arm of Ubreak iFix, 50 plus store chains. And then TELUS didn't even stop at the Canadian borders. They went into United Kingdom and acquired iSmash, which had only 30 locations. A few months after that, Assurant went in and acquired the next big chain out there called with 19 locations called Pocket Geek Tech Repair. So as you can see, even globally, this market is fragmented, and there's very small chains out there which are there to be to be acquired or consolidated. So we are doing the legwork in Canada to acquire these small chains and doing the consolidation in this space. One of this I'll take few minutes on this slide, and I'll tell you the strategic reason behind TELUS acquiring mobile clinic for this price itself is is they paid them 10 times of revenue. But if you're gonna notice that TELUS implemented, they wanted to there was strategic acquisition to control the entire life cycle of the cell phone space. So from the first sale to repair and to resale of the devices, TELUS wanted to control that life cycle, and they've done a fabulous job in doing this. So when they're selling the new handset devices, um, if somebody wants a repair done, so the repair is being handled by TELUS' own subsidiary called Mobile Clinic, and then when after the end of the cycle itself, when the phone that goes back to TELUS is being given back to Mobile Clinic to get refurbished and to put back into the market itself as a resale unit, right? So there is this. This is quite evident about the previous statement, which I've said that the pre-owned device sector is the next phase of growth in the technological industry itself, and TELUS and the insurance companies coming into the space itself is quite evident and a big statement of supporting that. So, and as you can see, Rogers and Bell, and this act has not done anything similar in this space, but there has been similar acquisitions happening across the planet. But there in Canada, only one has happened, and we are doing the next consolidation itself of acquiring other chains itself and being the leader in the space. Apart from apart from the revenue growth and everything else, we are proud to say that we've given back to the planet. We have partnered with Call to Recycle, one of the non-profit organizations in Canada, which we have used to recycle over 35,000 batteries. So otherwise, they would have gone into landfills, right? So we've done our due diligence of giving back to the planet, and our giving back was recognized, and we were just presented by the Sustainable Business of the Year award, which was hand presented to us by Google. So we're proud of that achievement to what we've done. So this is our financial performance. As you can see that we've been growing rapidly since the start itself, and we'll exit the current year with approximately 20% growth, and we expect to accelerate our current growth even further in the next 2026. So I'll tell you about myself itself. This is a leadership team chart, and I'll tell you who the leaders are of the company. So I'm the founder and CEO of Dr. PhoneFix. This is Dr. PhoneFix is my fourth venture. Before this, I came into this space itself in 2009, since the launch of the first iPhone. I've seen this in this industry rapidly being changed. So I formed first company, exited, then I formed second one, got exited. Now Dr. PhoneFix is in place. So I've got a good experience and track record of building and scaling and exiting in this space. Um, Mr. Sunil Goel is one of our early investors in the company too. He has 15 years of telecommunication experience. Mr. Anil Verma, he is also part of the telecommunication space. He has 10 years of experience. So he was part of a bigger telecom called Bell. So he had one Bell dealership. He grew from Bell 1 to 10, and he ended up selling it to a bigger dealer. So collectively, if you're gonna see, we've got about 40 plus experience in the telecommunication space, the three of us, right? We know how to build, capture market share, and then scale. So Jason Vanderberg is a publicly renowned CFO. Jay Berninsky is our independent board chair. He's also the VP of EPCOR. Graham Barr and Frank Sir are legal counsel. Jeff Floyd is our independent director too, and he's the ex-VP of Stantec. And Rob Cole comes with an immense capital market background. So we've got a solid board and the team itself to to help us deliver our execution plans and to be the leader in this space in next 12 to 18 months. This is a corporate information. As you can see, 70% is held by the insiders. And the three faces which you have seen in the previous slide hold majority of that. Um, and we are tied into escrow for next 3 years. So we are in there for the long game. Our public float is only 30%. That includes the recent non-broker private placement which we completed. Plus, the acquisition of Gibo, what we did was half cash, half shares. So these also includes that as well. And the escrow shares which we have, they're all tied up for next 3 years. So they're not coming out of in less than 3 years. So we are quite committed, as you can see, to take this company to the next level. Our market cap is 37 million as of November 28th, and we've got warrant and options outstanding as part of our go to IPO and our non-broker private placement. So yes, so as you can see, our public float is little, but the insiders, are well committed to take it to the next level. So in a highlight itself, I'll tell you that we are strategically well positioned. Dr. PhoneFix is strategically well positioned to be the leader in this multi-billion dollar space of repair and resale within Canada. We've executed our growth in the past. We are continuing to deliver it. We've actually, like I said, we've fast tracked our growth by ending the year with 45 locations. This fast track has reduced our growth time by 3 months. And in next 12 to 18 months, we'll be doubling our store count and we'll be on track to be the leader in this repair and resale industry itself. So all the, you know, so it's so we are growing and we have a clear path to grow. Well, thank you so much, Martin. I hope I answered, I presented whatever the needs were in this presentation. And if you have any questions, I'm open all ears.
All right. Thanks, Piyush. Yeah, good presentation, a lot of information, but I do have a lot of questions to follow up with just to dig into things a bit more. You said you're going to end the year with 45 stores. You're at 41, so you're going to add in 4 stores. Are those greenfield organic store openings, or are you planning on, do you have a few more acquisitions up your sleeve? You got less than a month here to go to get to 45, so you should be pretty confident, I guess, on that number.
Absolutely. So we are already at on track to be at 45, and those are all organic, the remaining ones.
Okay. Which provinces are you opening those stores up in?
So it's gonna be across the nation itself. One in Alberta, Ontario, and one more in Atlantic.
All right. Okay. You've got the three lines of business. You've got the repair. You've got the reselling of the factory refurbished or the refurbished phones, and then the accessories. You mentioned that the accessories have the highest margins, as I think we all know. Whenever we buy a cable or a case, they always it's impressively priced there. Um, what are typical margins you have for reselling the refurbished phones and the phone repair services? Are those comparable margins, or can you talk about the margin profile of the largest parts of your business?
Absolutely. Yeah. You know what? Like I said, accessories have the highest margin. We see
Yeah,
about close to 75 to anywhere between 80% of gross margins on those accessories categories. Our repairs comes with about 52 to 55% gross margins.
yeah.
Phones are currently about 28 to 29% gross margins, and but we have created a plan to take it to 32%.
All right. And can you clarify? You get some of the phones from Assurance, insurance company, but where do the phones come from? Do you buy like crates of them off of the insurance company, or do you just take them in from your clients, fix them up, and resell them? Talk about that whole used refurbished phone supply chain.
Absolutely. So, Assurant is one of the leaders in this device life cycle management. So they're the one insuring the devices when somebody buys from telecom or the manufacturers itself. So when a device breaks down and it's difficult to repair, they send those devices goes back to the insurance companies. So insurance companies put those into a lot, and we go in and we take bid on those lots, and we get those devices in our network. So when we get those devices, we repair them, we certify them, and we resell them back into the market. And like I said, since we are OEM affiliated, so we buy parts and we install parts which are OEM certified. It goes through all 58 point of inspections, and that's how we provide 12 months warranty on those devices, which Dr. Phone Fix sells.
All of the refurbished phones because you buy them sort of broken or not refurbished, you do the refurbishing yourself. Do you only sell them into your own stores, or would you sell them to other stores as well and act as a wholesaler there just to get some incremental margin?
No, we actually sell it within our own stores, direct to consumers. So
Yeah.
that's interesting, which you brought up. That's an additional piece of line that again, like I said, there's a big demand for phones out there, even for other businesses as well. And and yeah, there is an opportunity to get into that space of wholesaling from Dr. Phone Fix to other locations. But within our network of Dr. Phone Fix stores, there is such a big demand that it's that we don't have the need to sell it anywhere else.
All right. Obviously, you've got 1 hour turnaround on the repairs, so that's done clearly at the different store locations and everyone's certified there. But if you're buying big batches of used phones from the insurance companies, do you have like a central repair services location and you do them all there, or do you sort of send them out across the country and they get refurbished at all the various locations?
Yeah, you're absolutely right. We've got a central repair facility as well where we bring in those devices. Uh, we use multiple channels. So we got a central repair facility. So we bring those devices in, we repair them, and if the bandwidth is not there, we send it to the stores and have them refurbished. So it's quite cost effective as well because when a technician is sitting at the store, he's getting paid even if he has no repairs. So it's better to get him the devices and get value from his time being implemented into the locations. So yes, so we do multiple channels, but our first priority is to bring them in the central facility, repair them, and certify them, and then send it. And if the bandwidth is not there, then we send it to the stores to get it done.
All right. And are you buy phones off of the insurance company? When one of their insured phones comes into your store, do you have that relationship where you determine whether it's fixable or just to send it back to them and then they get a free upgrade, or do you work on that side of the relationship with them as well?
Absolutely. So if an insurance phones comes into Dr. Phone Fix, the first thing what the store does is triage them. And if it's repairable, we repair it, we fix it, we bill it to the insurance company. All right. And
Okay.
if it's not repairable, we send it back to the insurance companies. And in fact, the customer gets a different device from the insurance company itself. So, but like I said, everything is fixable. So when the phone
Yeah.
comes in, even from the insurance companies, 99% of the time it's repairable. So we repair it, and consumer is happy as well because they don't have to worry about transferring the data from one device to another, or losing their data itself, because you can have data being lost from when a device transition happens.
You didn't men I would think you could have a big piece of business from reselling like mobile plans from Telus or Rogers or Bell or from whoever. When they come into the store, you can say, "Oh, your plan is almost done," or "This phone is dead. We could sell you a plan," and then you get like good commission off of that, reselling for the big carriers. Is that an opportunity, or does that maybe somehow conflict with the other part of your business?
Well, it's it does actually conflicts with the other part of the business itself. The reason we mentioned carrier neutral itself, because as I've told in the presentation itself, we are one of the tools in Canada, and our only competition is TELUS owned subsidiary Mobile Clinic, right? So when obviously the other telecoms prefer their customers not to go to their competitor subsidiaries. So we intend to be carrier neutral so that we get business from the other telecoms and the other insurance providers handling the other telecom businesses itself. So that's so if we say TELUS is one third of the Canadian space, we deal with the other two ones as well in the market, and even the smaller ones too. And we have a bigger market share of revenue growth from dealing just by staying carrier neutral.
Right. So if I'm with Rogers and my phone breaks and I've got an insurance plan, I phone up Rogers and I say, "Oh, my phone's broke and I've got insurance on it." Will they then say, "Oh, okay, you live here, you're the closest, there's a doctor phone fix a few blocks away from you, bring it into there." Do they sort of steer business towards you?
Yes. So
Okay.
they tell the customers the doctor phone fixes this much proximity at your location or at your address itself. You can go in, get your device fixed, and it's a 60 minute repair window. And consumers love that because, like I said, you park in front of the store, you get inside the store, drop off your phone, go grab yourself a coffee or do shopping um, at No Frills or Superstore or anywhere in the plaza itself, and come back, your device ready for pickup.
Let's move on to your growth of new stores. I believe your slide said when a store matures, it's doing around $320,000 a year of revenue.
Correct.
Um, how long does that typically take to ramp it up to that level? And like, I guess how much does it cost? What are the economics between opening up a new store and growing that versus acquiring a chain and then already have acquiring a group that's already has a running start and then you can just optimize them?
That's a good question. I'll tell you, you know what? It takes roughly about close to about 250 to open up a store. Um,
Sorry,
two
$250,000?
hundred fifty thousand to open up an organic store itself from
Yeah.
scratch. And that includes leaseholds, inventories, training costs, tools, everything all together, right? So when we start doing that, it from day one, it takes about 6 to 7 months just to ramp up the business, and from there, another 6 to 7 months to take it to the level of 320,000. But when we acquire locations, like I'm gonna give you an example of the one which we just acquired, these stores were doing on an average of 200,000 in revenue, versus Dr. Phone Fix is already doing 320 in revenue. So we have that room already of to build from what we've acquired, and expedite that to take it to the level of Dr. Phone Fix. So
All
on day
right.
one, so when we acquired a location, we have revenue coming in from day one. Versus when you open up an organically, it takes time for people to know the location that Dr. Phone Fix is in there within the community itself, people to get the traffic in. So it takes about 6 months. So we are shortening that 6 months period window by doing the acquisitions and expediting and accelerating our growth.
All right. You mentioned that when TELUS bought the biggest independent chain, they paid 10 times revenue, and I did some quick mental math. It sounded like also that equated to about $2 million per location.
Correct. Again, like I said, tell us when they bought out again mobile clinic, it was a strategic move as they wanted to control the life cycle of the device itself from sale to repair and to resale again, right? So
Yeah.
so they made a bit of a premium of doing of controlling that sector.
Yeah. And then I guess as well, they have the opportunity to say, hey, do you need a new mobile plan considering you're on Rogers or whoever else, so they can get into that situation as well.
Well, if you have the opportunity, might as well use it. So I guess yes, I
Yeah.
would say yes to that.
Yeah. All right. Well, what I'm thinking is given that your stores seem to be doing much like 50% plus more revenues than the chain store that TELUS bought. So that just in itself seems to make it much more valuable on a per store basis. I think it's pretty obvious how your chain could be valuable to the other carriers or even tell us for them to get a bigger footprint and why you're trying to stay carrier neutral. Explain how you would work, like your strategic value to the insurance companies. Would they, like they've been buying some locates in other countries as well. How would you, what kind of value would you add to an insurance company?
I would say, you know what, we first of all, the value of us for the insurance companies is that their devices are being handled professionally. Like I said, the people with OEM relationships, there's only two out there. We are one of them. Um, Consumers are looking to get their devices fixed as an OEM standard, not for an unofficial part. So we use OEM parts itself, so there is no glitches on your devices when the device is repaired. So the insurance companies definitely want a partner like that. What valuable we bring for the insurance companies is that we are creating a better customer experience uh, rather than a customer mailing the device to the insurance company, which and then insurance company repairing it and then sending it back, which making the customer unaccessible to their device. So we are shortening that window to 60 minutes. We are bringing that customer to the store and getting a device repaired in front of them in less than 60 minutes. So it's a whole good customer experience even for the insurance companies. And if a customer is happy, there's always, they could recommend more insurance business from their other friends and family to the insurance companies. And yes, so this is kind of the strategic value what Dr. Phone Fix brings to them. Plus,
All right.
plus, you know what, the life cycle of the device too. So we are into the world that you will see probably the way the pre-owned device segment is growing up. So we'll see probably consumers adding insurances even on a used device. So we are looking at this space as a whole, like a pre-owned device car. Like if you're gonna notice the certified pre-owned device vehicle sector, like it's just suddenly started to come up, and then now it's one of the biggest market onto the planet itself if you have a used vehicle. So the used phones market is also seeing that exactly same growth.
All
So
right.
while I'm talking to you, maybe there is insurance companies working in the background to actually create plans to add insurance on used devices too, because 500 million devices shipped across the planet in by 2028 will be used devices.
All right. I'm assuming that your ultimate plan is to be acquired by either a telco or an insurance company or anyone. Is that the plan, or do you just want to keep growing and then go international? What are your plans? And if there would be a takeout, what do you think, how big would you like to get sort of to maximize the value for Dr. Phone Fix and the shareholders?
So I'm going to take the best interest for my shareholders if an opportunity like that persists.
Yeah.
But our plan is to right now just to grow
All right.
to the next level, be the leader in Canada. But
Yeah.
again, if an opportunity persists along the way, I'm gonna take the best interest for my shareholders, and I'm gonna think about my shareholders first, um, and make a decision at that time.
All right. You said you're going to double the store count, go from, well, you're ending the year at 45 and then going up to 70, or would that be get up to 70 by the end of 2026 is the general plan?
Our plan is to be at 70 locations in next 12 to 18 months. So,
Oh,
like I said, when I told 12 to 18 months, we were not projecting, we were projecting 45 locations by Q1 of 2026. We've already accelerated
okay.
our growth by 3 months in advance. So we'll be
Yeah.
ending the 2025 with 45 locations. So, I'm gonna be doubling the store count as I expedite my growth.
Yeah.
But realistically, my plan is to be at 70 locations in next 12 months.
Gotcha. Okay. With the cash, you're EBITDA positive, and you're going to do a combination of both acquisitions and organic growth. You've talked about what it costs to start a greenfield and what it costs to acquire a location. Do you see yourself having to raise more equity in the markets or add some more debt to your balance sheet to grow, or will you are you going to limit your growth to sort of self-funding the growth that you can execute on?
Uh, the cash what we actually raised is enough to actually take it us to the next level of getting the first acquisition done of 6 locations, adding another 7 or 8 more locations, uh, and we expect the warrants to be exercised. So if the warrant gets exercised, we don't need the to go and raise more money. But definitely to increase the store count to 70 locations, yes, we will be looking for a new raise.
Okay. And how much money would the warrant exercise bring in?
Close to about 2.5 million.
Okay. All right. So you're saying for around $2.5 million, that would be sufficient capital to get you to that goal for next year?
Correct.
All right. All right. Okay. Have we covered everything, or do you think am I missing any of the key points on how you're growing your business?
No, actually, you know what? We've covered everything so far. Like I said, this is an exciting category to be in,
Yeah.
and it's going globally. Um, and and there has been only the way the Canadian space is, there has been only one um, primary competitor for us in the space itself, and we are looking to consolidate the market and be the leader in the space. This is a multi-billion
Okay.
dollar market of both repair and resale within Canada alone, and there's more room to grow.
Right. Well, with that, Piyush, I thank you for taking the time to talk with us and tell us about your plans. It's you got I think you got a huge opportunity there. That's awesome. Thank you.
Thank you so much, Martin.
All right. Have a great day. Talk to you soon.